Hello, hello. Give me a second. I am adding Jahlinda to this live. In this live, we're going to be talking about how to leverage different financial tools as well as talk about real estate. So, if you want to give me just a few minutes to request Jahlinda, and here she is.
How are
Hello.
you?
Good. How are you?
Pretty good, pretty good. Just trying to set this up right. Okay. Okay.
It's the perfect lighting. We see you perfectly clear.
Mm-hmm.
Well,
How you doing today?
I am doing well. I'm excited to share a little bit about what I know as well as learn from you as well. So I think it's going to be an equal learning opportunity for the both of us. Um,
Mm-hmm.
Hello, everyone that's coming in. Hello, hello, hello. Thank you guys for joining us. Today, we're going to be talking about not only real estate, but how to leverage different financial tools that chances are you're not even thinking about. I think we have a pretty good amount of people in right now. So, I say let's just jump in, shall we?
Okay. Would you like me to introduce myself, or you want to go first?
I will
Okay.
give you the floor. Introduce yourself.
Okay, well, hello everyone. I am Jahlinda Jones. I'm actually the Chief Operating Officer of Insure Financial Group, an insurance agency my father started back in 2002. We have 16 agents that educate on financial literacy all throughout Florida, Georgia, and North Carolina. And so we're very passionate about educating and helping people understand life insurance, burial prearrangements, and annuities as well.
Perfect. Well, my name is Anne-Sophie. I am a realtor at Allure Realty, and I've been doing real estate. Well, I've been in the industry, in the real estate industry for a few years now. But previously, as a property accountant, I transferred over my skills to the sales side, which is helping people find their dream homes and as well as helping them sell their homes. And I like to say that real estate, I guess one thing that I do want to clarify about real estate agents, having a real estate agent goes beyond um, finding a home, right? It goes beyond helping you find your dream home. The real value that we add, because think about it, Zillow exists, you have homes.com, you have all these different apps at your fingertips that you can find your own home. The true value of the real estate agent comes in when we negotiate on your behalf. We make sure that you're moving in with as little money as possible, with hopefully instant equity, and making sure that no one's taking advantage of you and reading the fine prints that most likely you're not going to read. So I think that I certainly want to clarify that for everyone, because I think long gone are the days of realtors just being a key to open the door. Realtors have to come with more value, and I think that that's the value that we add. What about
That's
like like in your role, how do you add value to clients?
Yes, I think it's that same lane of where now a lot of things are online where you can go and just purchase some insurance. But most people, when they do that, they don't even understand what they just bought. They just buy it because, hey, it was convenient and it was cheap. Well, we all know if it's cheap, it usually, oh, that's water. I have my water here too. But with life insurance, a lot of people, if it's cheap, usually it doesn't last long. And that's definitely the case for a lot of people where we come in and we educate on smart insurance. That's insurance that does more than that one trick of leave a death benefit to your family. That's insurance that also has some bells and whistles like cash value benefits that we're going to talk about today.
Yes.
Dividend paying life insurance. A lot of people have not even heard of that, but now are becoming more awakened to these tools. So I love sharing about it, and I'm excited to get into that today.
Perfect, perfect. And you know what I think is extra cool about this whole process is that I get to have you. Um, Now you're in the shoes that of many other people, right? You
Mm,
recently went through the process, so like, I guess I want to hear from your point of view, your experience being
yes.
a buyer
Mhm.
in a real
Oh,
estate.
yeah. I'm so glad. Okay, so this is why we had to do this live because I I thought I understood the whole buying process. You know, you hear the pick up the little things of, okay, you need an FHA, you want an FHA or something like that. And then the realtor is telling you, okay, you want to make sure you're getting the most for your amount of money you're going to spend. So know what you can afford monthly. I thought I had that all understood. And then when I went through actually a new builder, I found out, wait a minute, this process is going quicker than I thought it would. Wait, I'm giving you money already? I didn't understand that, okay, the real role of the realtor, like you were saying, is to add value of, no, we would want to see if you can pay all of the closing costs. What else can we find and get waived for you? If you don't have that relationship with a realtor, you're just over here like, oh, that sounds like a good deal. Oh, and my interest rate is this. That sounds like a good deal too. So for me in that process, I really thought like I understood it. I have realtor friends, so I thought I really had a great grasp on understanding how to buy a home until I went through the process, and it went so quick. And I'm over here still with the questions like, wait, so once I give you the money, I can't make any changes? Question mark. I have a lot of questions that I think you can go in to tell us, like, what is that value that a realtor adds that I just didn't know happens in that process? Because if it was up to me, I thought that, okay, you choose the home, and then after that, that's when they make you go to the first time home buyers class, and then after that, now you're just walking slowly through this process. But no, it can be very quick depending on your credit score and things like that. But what would you say are those key things that someone should start with when it comes to thinking about purchasing a home?
So I think I really like that you had that perspective and that experience, and that you can share that with others. And I think your experience was extra speedy because you went with new construction. And
Mm-hmm.
construction is a whole different ball games. It does not require that you use a real estate agent. But if you don't use a real estate agent, you a lot of times can end up lost. You end up leaving money on the table. You end up finding out, for example, that now if I want to make a change to my home, I need to pay a change order. Like, what is,
Yeah,
you know what I mean? So,
2,000 more dollars. Yes.
exactly. So you end up spending more as a result of like not using a real estate agent on a new construction. And I think that's where we come in as real estate agents. I think if you're a person that is looking to either buy new construction or resale, your very first step is one to visualize. I always say that's one first thing first. Visualize what uh, the first like what home ownership looks like to you. Put it down on a piece of paper of like what you visualize your first home being, and keep in mind that this is your first home. Don't like I'm not saying like don't visualize that dream home, but also be realistic about
Mm-hmm.
your first home and what your
Yeah.
pocket can afford. You know what I
Yeah,
mean?
and while you're on that topic of your first home versus starter home, could you please help us understand, like with a starter home, what are your compromises? Because like it's kind of hard when you're going through these houses and you're like, well, I really want a very nice bathroom. I really want a larger space. Like, how do you know what's really smart to do as a starter home and not, because we understand, okay, maybe it's not going to be your dream home, but this is just your first home. But really, what makes it the starter home, and what are those compromises where it's just like, okay, I'm not going to do this forever, but this is just so I can experience buying a home.
So what makes it a starter home is that it's not your dream home. It's the stepping stone to getting you to your dream home.
Mm-hmm.
With a starter home, you're looking at the foundation. Like I always tell my clients, like if you as a starter home, unless you're trying to pay the big bucks, the best way to find a starter home is to think about key things like the foundation of the home, right? We want to start strong foundation. For example, if you're a person that loves bungalows, but you're looking at a 1915 built bungalow that's wood framed all around, know that you're going to spend some money. You know what I mean? Like
Mm-hmm.
it may come with a little bit more headaches as opposed to going the brick of getting a home that's built just with blocks. And oops, sorry. And I would say for starter home, what's important is one, the foundation, and two, the layout. Now,
Mm-hmm.
ever, I think people need to realize that layouts of homes are super important. We're entering an age that like work from home is going to be probably sticking around for a bit. So now when
Mm-hmm.
people are looking to for a new home, what are some of the key things that I'm hearing when I'm looking out with buyers now? Oh, can you make sure we have like a flex room, or can you make sure that we have some kind of loft area that we can turn into like a work from home space? So those are some of the things that were not pretty important, but now home buyers, that's what they're looking for. So when you're buying your first home, it's important to look for that layout. It's important that the layout of home that you choose fits your lifestyle. And what I mean by that is, if you're a person that eats a lot, you might want to make sure that you have a large enough kitchen. If you're a person that likes your privacy, you might want to make sure that you have a split floor plan. So like when I work with people, I like to ask them, what's your lifestyle like? Do you like to entertain? Like your peace and quiet? Those are all key pieces that you want to consider when you're looking for your starter home. Now let's talk about the compromises that you have to make when it comes to your starter home. You're
Okay.
gonna walk in the home and it's not gonna have the color that you want. It's not gonna have the granite color that you want. It's not gonna have the sparkly quartz that you want. There's chances are it's you did not build the home from the ground up. So the home is not going to have everything that you have on your checklist. So and I always tell people, when it comes to a starter home, like your first, you need to put less emphasis on the materialistic things, on the cosmetic things, such as color of the cabinets. Oh, I want the color of cabinets to be, I want a white kitchen. I want, oh, nope, I don't want this house. The kitchen was white. You know what I mean? Those are things that are less important when you're looking at a starter home. Now, when you're looking to build your dream home, of course, go for it. Get the white cabinets, get the quartz countertop, get the most expensive Italian granite, like do all of that. But as a starter home, I think it's important to think about value, seeing a home, potential in a home, seeing how you can make the home your own, and going from there.
Okay. Those are great questions. Now, the next thing that I did not learn until actually at the table was the different type of assistance, financial assistance that you can have access to. So the three that I learned about, well, I already knew about FHA, but I learned about the conventional and the USDA. So the FHA, I think you put down about 3.5%. The conventional was 5%, and the USDA was 0% down. And so I was like, oh Lord, I really want to get the USDA. And I liked that because it was the one I didn't have to put anything down. So were there any others that you knew about that you wanted to share with us, or any recommendations there? Or I had a question come in for this live. They wanted to know, in the Tampa area, what's the specific limit of an income that it takes to qualify for any of those assistance programs?
So FHA, VA, USDA, these are all loan types. And
Mm-hmm.
so FHA, the whole purpose of FHA was to create a way for people to be able to afford a home without quite putting 20% down. A lot of people think you need to put 20% down, but that is not the case. FHA,
Mm-hmm.
it's the very entry. It's like the entryway to home ownership. It has looser guidelines to allow for people that otherwise don't have that 20% to be able to get a chance of owning a home. So that's what
Mm-hmm.
for. It's not it's great for first time home buyers because typically they don't have as much savings, and typically
Mm-hmm.
their credit is a little lower, or typically their debt to income ratio is a little higher. Now the next up is a conventional loan. A conventional loan is a really great product because um,
Mm-hmm.
the FHA loan has something called a private mortgage insurance, and that's what can drive your monthly payment up, because the private mortgage insurance, it is what you're paying the bank. It's kind of like you're buying an insurance policy for the bank, saying that, you know what, if I ever default on my home, here's an insurance that will make sure that you recover your funds. So because you're getting an FHA loan and you're considered a risky buyer, you're required to have private mortgage insurance. And it is a certain percentage of the purchase price. And then we have conventional loan. Conventional loan is a great product to get into. The mortgage, and there's also mortgage insurance on it, but the mortgage insurance goes away once you have you've either paid 20% of the way or you have 20% equity in your home. Then you could get finance and get rid of that mortgage insurance. When you
Okay.
have an FHA loan, you don't get rid. You stay like until you refinance, you'll always have mortgage insurance. As opposed to conventional, when you reach 20% equity in your home, you can
Mm-hmm.
get rid of that mortgage insurance. So
Okay.
that's the main difference. With conventional loans, there's a few different programs. There's actually a 3% conventional program. However,
Oh.
has a much higher credit score requirement, which is why
Mm-hmm.
people usually qualify for the 5% as opposed to the 3% conventional loan. And then the USDA loan. So this USDA loan, 0% down. It's supposed to encourage people to move to more rural areas. So if you're looking at a rural USDA loan, it has certain like there's an app affiliated with it. You can only
Mm-hmm.
the USDA loan if you fall within the outskirts of what the government considers rural areas.
That's
Um,
Lakeland over here, y'all. That's why we had it. Because Polk
you
County is very rural.
got to take advantage. And last but not least, VA loans. VA loans are great if you're a veteran. 0% down. And it's pretty much in terms of being 0% down, it's very much so similar to the
USDA,
yes, thank you. And
0% down. Hmm?
in addition to those loan types, there are also other loan programs available out there that do allow for you to buy a home with zero down, but it requires a higher credit score. So
Mm-hmm.
I know of one that with a 620, you with a 620 credit score, you can qualify for 100% finance. And 100% financing means that you will not put any down payment.
Mm-hmm.
However, give something to get something. So with that specific loan program, the credit, not the credit score, the interest rate on it is a little higher. However, since you're not putting no money down, I'm sure that means you have money extra that you could use to buy
Mm-hmm.
that interest rate down.
We're getting
So
some questions here. They're for you. They're ready.
are you a realtor or a loan officer? I am a realtor. What is the score requirement for a 3% conventional? I don't want to lie to you. I'm not a loan officer. I don't want to lie to you. I don't want to tell you off the top of my head what that requirement is for a 3% conventional. But not only is it a credit score requirement, it's also a debt to income ratio requirement, and that's usually what gets most people. I think with that, I think you have to, it's in this at least like 680, I believe. Don't quote me on that. But what gets most people is the debt to income ratio. With a conventional loan, it's very strict on debt to income ratio.
Yes, and the conventional too does have an income cap. So you got to look into that. But that brings up a question, which you might know this. Do you think it matters if you go like with a new build, they kind of want you to go with their loan officer. But
Mhm.
do you think there's any advantage to knowing a loan officer personally versus using the one that comes with the new build or that usually is recommended?
I'm just going to be honest and tell you that when it comes to new builds, a lot of times it's in your best interest to go with their lender, only because
Hmm.
they know, they've been in this business, they know how it goes. New construction builders, they like to have control over their transactions.
Yes, they do.
A lot of times they partner with with a mortgage company, and they have a relationship established, and they know that this mortgage company will do their absolute best to make sure that this loan can,
Make it
and if the
right.
loan can't close, this
Mhm.
mortgage company will let them know ASAP. So builders usually have great relationships with a mortgage company that's either their own or they just partner up with somebody else. And with that being said, they make it hard for people like that's buying new construction because they give you deals. They give you incentives. They provide you with incentives to work with their lenders. So they'll tell you, okay, well, if you use my lender, I'll give you $10,000 towards your closing costs.
That sounds like a good deal.
Yeah. Or they'll tell you, if you use my lender, we'll pay all of your closing costs. So a
Mhm.
lot of times builders have those types of incentives that other lenders just simply can't compete with. Um, but yeah, so typically it's best to just go with their lender and just be in a strategy that you can use to make sure they're offering you their highest and best is presenting them with another pre-approval that you have. For example, some builders, they'll tell you, give us the opportunity to give you the best pre-approval possible, and if we can't match it, then we'll still give you the incentive and you can use your lender. Some builders do that, but a lot of times they do that because they know they can match it or beat it. Um,
Mhm.
that's
You
the.
have another question here too.
Let's scroll down. How do I go about finding the right real estate agent? So I'll tell you this: there's a million real estate agents out there, and we all have the same. We all have access to the same tools. But at the end of the day, you want to find somebody that you feel can add value to you. You want to make sure you're working with somebody that is knowledgeable about the process, knowledgeable about more, knowledgeable about all things as it revolves to your transaction. Because that's the real work is not finding the home. The real work comes when our real value comes in when you have to negotiate and represent your client's best interest. Our work starts once that offer starts rolling in, making sure we're coming with a strong offer, making sure we're putting you in a best position to not only win that offer, but also saving you money, getting you some closing cost assistance if necessary, making sure that like the home is worth what they're asking for it, because just
Mhm.
to 250 doesn't mean that the home is worth 250. And why should
Mhm.
you pay 250 if the home is not worth 250?
Well, when you say that, could you still negotiate a price with a new build home like you could with a home that's being sold by the owner? Because that's the question I have.
So with new builds, they've done their research, they know that market, and
Mhm.
they price their home in a way that it will almost always appraise. And the
Mhm.
for a new build is the more homes that they build in that community, the trend is the price is going up. So like the
Yeah.
phase, you might be able to get in the first phase at 250, and in the next phase for that same home, it's selling at 265. So like, so that's something to keep in mind with new construction. Typically, they know their stuff. They've done the research. They've done years or countless market research, and they make sure that they price their homes in a way that it's definitely going to appraise. So why I say to not, like, certain builders absolutely do not negotiate on price, and there's certain do, and that's why it's important to work with a real estate agent so they know, because a lot of times we have personal relationships with the people that work at the new construction place, and what people don't realize is the people that work at the new construction place, they are not realtors. They are new home specialists or new home representatives. What does that mean? When you're a realtor, you have to abide by a certain code of ethic, right? There's just certain things that you can't and can't do. They don't have to abide by the same code of ethics and conduct that we have to. And they work for the builder. They represent the builder's best interest. So like, of course they're going to help you throughout the process, but they're looking for their builder's pocket. Like they're going to make sure that, oh, perfect, she wants to pay full price, she doesn't want us to give her any money towards her closing, perfect, let's sign it. Oh, sign on the dotted lines. Oh, you don't need to read the contract, it's pretty simple. Like it just says that, if you don't buy the home, you won't get your money back. But like, so that's why it's important to go with a real estate agent, because we're knowledgeable of the process, we know the contracts, we know, we have the relationships, we know when we can push it, and we know when we can't.
Yes, I would say go with a realtor too, because they're going to be more they're going to be non-biased versus the person that's sitting in there trying to sell you the home. So I would definitely say get you
Yeah.
a realtor who knows what they're doing, and they can definitely help you with that process. There was something else that you wanted to speak on today about the equity in the home, or how you can really leverage that financial tool. So what were you about to say about that? And then I'll go into leveraging financial tools on my side.
Yes, I think when it comes down to it, a home is an asset. right?
Mm-hmm.
Money, like regular money, like it's just printed. Like it literally depreciates. Like the minute that the government decides to print your more money, like your money now is worth less. Like your money can now buy less. So it's important to one, take advantage of low interest rates. Low interest rates means that over the life of your loan, you will be paying less in interest. So that's less money that you're just stuffing in the bank's pockets just because you wanted to borrow some money. So that's what low means. So it's important to take advantage of low interest rates. And it's important to, like, I think a lot of people are conflicted about buying a home, but it's an asset and it can only, for the most part, it appreciates. It appreciates in value. And there's things that you can do to make sure that your home appreciates. Whenever I have whenever I have clients that are interested in what they call cookie cutter homes, like
Mm-hmm.
I said, you can still go for it, but what you're gonna do is you're gonna make sure your house is a little different than your next door neighbor's house. So yeah, get that home. It might not have the granite countertop now, but like when you move in over time, maybe you get like a tax refund check. That's money that you can put towards getting a new countertops. Like maybe you get a little bonus check at work. That's money you could put towards upgrading your cabinet, updating your updating like little things, like maybe getting new flooring, maybe getting new hardware in the kitchen. Like these are all little changes, that little things that make your home unique, that make your home different. And that will make the next buyer,
Mm-hmm.
whatever makes you fall in love with your home, that's what's going to make the next buyer fall in love with your home. So really take this time. Don't do anything crazy. Don't paint, like don't do anything crazy like painting something. I mean, you can, but just make sure that, like, when it comes down to really wanting to reap the benefits and getting that equity out, that you're doing the work where it counts, which is the kitchen, the main flooring, and the bathroom. Like that's where it
The
counts.
the home sells for the bathroom, the kitchen, and that master bedroom. That's why I bought mine. I was like, this master bedroom's a bomb.
You're like
But
fit
I,
for,
I hmm?
it's fit for a queen.
Yes, definitely. But so I love what you shared today. Just talking about understanding the foundation of the home is really what you're looking into, the layout. How are you what's your lifestyle that matches the home that you're gonna buy? Those are very key points. She covered the VA loan, the USDA loan, conventional FHA. But if you have more questions, I would love for you all to go ahead and send her a message and see if you can go ahead and set up for her to be a realtor, because she's very well versed in her field. And then when we talked about the whole thing of leveraging your equity in your home, it brings me over to my side of insurance, where a lot of people, when we talk about insurance, we're like, oh, you're talking about that death insurance, and we don't want to talk about it. That's something that feels taboo. It feels like if I talk about it, something might happen. But there's some key things that are happening there, which I'm going to start by just recommending. If you haven't done your research, there's books called Becoming Your Own Banker, Money, Wealth, and Life Insurance, Wealth Unbroken. Where oh, now you're taking notes, okay? But yeah, Wealth Unbroken, where
Becoming your
becoming your own banker. And these books, you can find them online. If you want the PDF, you can just message me and I'll send you the books. These first two, Becoming Your Own Banker and Money, Wealth, and Life Insurance. But they break down life insurance so you can see where most people just think of it as a death benefit. There's actually a cash building part of, I want to say component, a cash building component in most life insurance policies with participating or mutual companies that allow you to build cash in your life insurance. And also, if it's a profitable life insurance company, they pay a dividend annually as well. So it's just making your money make more money for you. And the cool thing about life insurance in these strategies is that this is money you don't have to pay attention to. So a lot of people like to say, why would I get life insurance when I could invest in the stock market? Well, life insurance is not an investment. This is your guaranteed safe money. So, money you want to absolutely needs to be there. That's life insurance. Where investments, you have to manage those risks that come with it. So saying that to say that when you read the book Becoming Your Own Banker, it talks about when you're building wealth into this cash value, you're able to pull cash value out tax free. So a lot of people, they know about storing and saving money in their 401ks. But when you pull money out of there, you either, if it's before age 59 and a half, you can get penalized by that. You get taxed by that as well. Where life insurance, that cash value, you are using your pre-tax dollars to put your purchase your life insurance. So when you pull it out and you borrow against the money in the policy, now you can build that to go and put a down payment on a house, buy a new car, and pay yourself back. So where you went to a bank and got a loan, instead loan from yourself. Now that strategy and how that works into deep detail is something that I like to talk to people one-on-one about, because it varies based on your age, your gender, and your health. That you can say that, hey, I want to wait until I have a family and children before I get life insurance, but you're challenging if you will be in a good health in those years. I see someone saying insurance is a wealth building tool. Families, especially Black families, should start buying policies to create generational wealth. I feel like I paid you to say that. I'm going to say thank you. But absolutely, a lot of Black families, not even just Black families, a lot of us here buy term and invest the rest. But like I was telling you, life insurance is not an investment. This is something that you want to be a secured piece, where it's something that can work in addition to, well, actually, it should be first. It's what you want to secure first, because it's a guarantee versus a promise and something that's wavering in the market. So a lot of people, when they sit down with me, they get educated on the different types of life insurance and find out what's really in their budget and what's affordable for them. I love helping the community in that way, because it's just the understanding where you thought that term was great because you were going to get $1 million in term. It only costs you $30 a month. But if term says that you only want $1 million if you transition in 10 years. And most of us are trying to live the longest, best life we can. We're not trying to transition in 10 years. So for the company, what that means, odds to favor, is if you outlive that 10 years, they never paid you that $1 million. And it was just a beautiful number in the sky. Where whole life insurance says that whenever someone transitions, they get these funds. But while they're living, they do have access to the cash. As the dividends are growing the policy, you have access to that as well. And there's other benefits in it as well. And even when you go to purchase a home, like when I went through the process, they wanted to know where my cash was. So being able to see it in the cash value of my life insurance still helped me in purchasing a home, because they're like, okay, she really does have diversified funds. And so the cash value in your life insurance is just as liquid. You can pull it. You tell the company, hey, I see that I have access to this amount of funds. I want to pull it out. Within 24 to 48 hours, you can have those funds in your bank account. So I would love to educate and help people with that if they want more information on that.
So, question for you. So, you mentioned the dividends. When it comes to
Mm-hmm.
the does the company, do they like on a quarterly or however frequently they do their dividends, do they like send out a check, or is this something that's automatically reinvested into your policy?
Okay, that's a great question. So the dividends depends on the company. It's called a participating or mutual company, and those dividends are paid annually. So what happens when I first got my first life insurance policy when I was 24? I got in a certain amount, over six figures, and at the end of the anniversary of my first year, I got a letter saying, "Hey, you purchased this amount of life insurance with us. The cash value has grown to this amount." And you have a dividend paid into your policy was this amount. So there's three things that the dividend can actually do from these companies. As you build cash value into it, the dividend can go to increase the cash value, or the dividends can help pay for the policy, or you can get that dividend put into your bank account as an annual check. So every year as that dividend check increases, as you keep that policy with your life insurance company, they're paying you an annual dividend saying, hey, thank you for being a policyholder. We would like to share our dividend and benefit of the company with you.
Perfect. So, can you talk more about when you say cash value, like
Mm-hmm.
what do you mean, and like how can you maximize it?
Mm-hmm. Okay, so there's a lot of different strategies, and this is the key where those books are going to come into play, where you can really understand it. But a lot of people are able to either front and load, where they're trying to put a lot of cash in their whole life policy, though, so they can pull it out and borrow those funds for something else and pay themselves back, or they are thinking about the long-term gain and they're just trying to build up their cash value for retirement. And you can. So what happens is, let's say you have $100,000 in whole life insurance. You purchase that from day one. After it starts building up and you're building more cash value in it, you can borrow, like in 10 years, if it had access to 15,000 in the cash value, you can pull funds out of that and buy yourself a car cash and pay yourself back versus going to get a loan from the bank. Or if you left that money in there to cook and bake, and I tell people this strategy when they say, hey, I'm not married and I don't have any kids, why would I want life insurance? Well, actually, if you're not really concerned about that death benefit, then what you can do is say, hey, let my life insurance be a retirement income generator. So since instead of front loading it, you wanted it to be loaded in the end, what you can say is, hey, I built up over 200,000 in cash value in my life insurance. Call the insurance company and tell them, what would it look like to get from age 65 to 90 an annual check from my cash value to just start pulling the cash value out? What it's doing is decreasing the death benefit because that was what you were not concerned about. You just wanted the retirement income portion of that, ability of that. So that is something that a lot of major wealthy people do, is they use it as a retirement income generator. Or just in simplistic terms, a lot of people, if they have wealth in the stock market, wealth in real estate, but they don't, but you know, the taxes that comes with those things, they use the tax-free death benefit of life insurance in order to pay off the taxes that are incurred from other vehicles that are taxed. And
So
I said,
sorry if I interrupted you, but when we talk about cash value, is it dollar for dollar what you put in, or is it usually like, how does that work?
so with life insurance, almost pretty much all life insurance policies do have cost of insurance the first couple of years, but then after that, based on the company, you're going to actually be able to see what companies allow you to have access to more cash value sooner. It's not dollar for dollar because of the accumulation period of where first you had to pay for your cost of insurance, then after that you have access to the cash value. Then so it's not dollar for dollar until about maybe the fifth year, it starts to be more than what you put in. And then after that, it's like every $1 you put in, you're making $3 or $4. And so for me, I did this strategy at 24. I was only doing $150. And then when I got the letter after a couple years and saw, oh, my cash value was building, I was like, you know what? I want more of my money to make more money for me versus just putting it to the side in a savings account where it's just sitting there and looking pretty until I spend it. In life insurance, it can sit, cook, and bake and make money based on the guaranteed interest that's going to the cash value and the dividends as well. So it depends on the policy, it depends on the person and how much they're putting into it, how much cash value you'll have access to as how soon you'll have access to the cash value. So it takes us like actually creating a plan for a specific person. I can't really tell specific numbers unless I know the person's age, gender, how much they want to put into the side.
Okay, I have another question for you. So we're living in an age where there's so many solopreneurs. We have so many entrepreneurs. What are some resources? What are some products, or what would you recommend for solopreneurs, entrepreneurs? Like what would you recommend for them in terms of like life insurance or just like insurance period?
That is a great question. I'm glad you asked that. Someone I just did a live with yesterday, Kwamboka, she is a CPA as well as she has her own business, but she talks about the benefits of life insurance where you can get a tax write-off on the life insurance that you get and you use for your business. So your business, even though you're the insured for the life insurance, you can have your business paying for that life insurance. And depending on the type of company it is, you can get a tax write-off for that as well. So depending on the company, based on if it's a LLC pass-through or S Corp, it depends on if they can get those tax write-offs. But just having your business pay for life insurance in general is already a great benefit, because now when you're a solopreneur and you don't have someone creating a retirement for you, sometimes we forget that, hey, I'm going to retire one day. And since I'm my own boss, I have to think about what strategy am I going to shelter some cash in. That's where you would see that, hey, as a solopreneur, I can create my life insurance to be that retirement income generator where I'm kicking back cash to save for retirement that's going to be tax-free. So that is a great option that we offer. But then also we do have annuities as well where we can set those up to help them save for retirement as well. But for some new businesses, they might think that, hey, life insurance, whole life insurance is a little steep right now. I'm really trying to get off my feet. I don't have all the funds to go to life insurance. Then you could actually, with a company that allows you to get term and convert to whole life, there's a benefit where there's some companies out there that only sell term. So once your term is up, you no longer have insurance. When there's companies like the ones we recommend and we work with, where you get term because it's cheap, it's convenient, but you've qualified and you have your health locked in at its best rate. And so now when you're ready to make that transition to whole life because your business is more profitable, you can actually get that term and say, hey, I bought $1 million in term. I'm ready to turn 200,000 into whole life and start building cash value and getting some of those dividends that you guys offer. That's what you'll be able to do later. And depending on when you convert that term to whole life, you get the benefit of, they'll even give you your money back that you spent on your term. Now, those specifics go it's more into depth of the type of term it is, but I would love to share that as well.
Perfect,
The link
perfect.
is in my bio.
Well, I think I want to open up the floor. We've definitely covered a lot.
Yes.
Do you want to open up the floor? Because I don't have any more questions. So maybe we can open up the floor for everyone to any questions that they have about
Mhm.
real estate or insurance. Like let's answer them. Q-
Okay, so yeah, any real estate or life insurance questions? I see the first one. She says, probably most of us have life insurance through our employer. Is there a difference? That is a great question, and we get that a lot. A lot of people have life insurance through their employer, but most of the time, if you ever decided to change jobs, that life insurance is with the company and not with you. So when you leave, that life insurance usually does not go with you. So it's important to have an independent policy. So if you leave the job, you change states, that policy is your contract that goes with you. And so it's nothing wrong with having life insurance with your job, because generally it costs like 5, 10, or $2 really for life insurance with a job. So if they're offering it, absolutely have that life insurance. But it's great to have something outside of work, because no matter what lifestyle change you have, that life insurance is staying with you and protecting your family.
I'm glad you touched on that because being a realtor, I've been at several companies, and what you're saying is there's absolutely nothing I can do to take advantage of all those life insurance policies that I once had with those
Yeah.
companies. When
Yeah,
I
because those were called group term. Those
okay,
were called group term. So the benefits you have with that company stayed with that company. Where if you would have had a life insurance secured and taken care of outside of it, that policy would be with you and stay with you for the remainder of your
wow, where have you been all my life?
life. I'm
Okay,
just preaching.
you are just preaching today. Okay, do we have any more questions? Whether it's about the home buying process, whether it's about real estate or life insurance, any of that. The floor is
And
open.
while we wait for someone else to have questions, I do want to ask you, is there anything that you think people overlook that you wish you could just be like, work with a realtor, we would have helped you with this? I think you might know best.
Things that people overlook. Hmm. Are we talking about new construction, resale?
Any type of tip that you think that someone just would not consider unless they were in the field, seeing it every day. Like, man, that happens to most people. Because like you brought up before, where we're thinking that, hey, closing cost 10,000 towards closing costs is great, but we didn't know that working with a realtor could have got us completely no paying nothing for closing costs.
Yeah, I think one of the key things, especially when it comes to new construction, what I wish I could just like tell people is like use a realtor is because it costs you nothing. Well, regardless, as a buyer, it costs you $0 to work with a realtor. And a lot of people get confused because they don't want to work with a realtor because like they feel like, oh, the builder is gonna give me less incentives if I work with a realtor. That is not.
Mm-hmm.
Most builders have separate fund. They have a separate department that takes care. So the realtor's commission comes out of their like marketing department, because what we're doing is we're bringing them business, right? So either
Okay.
way, they have separate funds allocated to pay us. It has nothing to do with your purchase price. Yes, the commission is based on the purchase price, but it has nothing to. It doesn't touch your cash to close. It has nothing to do with your transaction. in terms of like, it costs you $0 to use a realtor. So like, I highly recommend, whether you're buying new or resale, use,
Mm-hmm.
because like we're gonna make sure you're protected on all ends, because our job is to just represent you. And I think that's the main thing. And when it comes to like buying resale, you really need a realtor, because we know all the tricks, all the tools, we know how the market is doing. We can assess, we can just make sure that like you are getting the most bang for your buck. For example, you might want to buy a house that we just know is not worth the fun. I'm not afraid to look, like I pulled the comps, and um the home is not worth it. So like working with a realtor, you get that added benefit. Like we're not
Oh,
submitting an offer without knowing that your home is worth what they're asking for it. And yeah, I hope
and
that.
I think it's important to point out too. I think a lot of people always talk about, okay, how much money do you have to put down? But then no one mentions that, oh, there's closing costs too that
Right,
you have to keep in mind.
right.
Like that kind of blew my mind. Like, wait a minute.
Hold
I
up,
thought,
no one
hmm?
ever said anything closing costs.
Yes. So like when you get if you get the conventional loan and you're thinking, oh, or the VA loan, you're like 0% down. What about the closing costs? Is that the same for VA? Do you, if you do 0% down in the front, do you have any closing costs there? Or
Of
like money
course.
that you have to bring to close?
Yes, even when you're using, whether you're using any types of loan that you're closing with, there's
Mm-hmm.
always going to be like closing costs, because the title company has to be paid, the lender has fees typically. Of course, for VA, some fees are waived,
Mm-hmm.
but to that, regardless of which types of loan you're using, one of the things that you pay for through your closing costs is called prepaids. And what you're doing is you're fluffing your escrow account. So lenders, when you are buying a home, lenders take into an escrow account. So they just have an account, escrow account, and those escrow accounts, they will monthly, they will, part of your mortgage, you're paying into your tax account, you're paying into your homeowner's insurance account, and they take that money and they put it in those accounts for you. And when the tax bill is due, they pay the tax bill on your behalf. When your
Mm-hmm.
insurance bill is due, they will pay it on your behalf. And that's typically the case for most people that are not putting 20% down. When you're putting 20% down, then you don't have to pay monthly into like your taxes, homeowners insurance, escrow accounts. But regardless, you're gonna need some lenders. It varies with different lenders how much you're fluffing those accounts by, but sometimes it's as much as 12 months of those taxes or homeowners insurance that they fluff the account with, so that when
Mm-hmm.
that bill comes due, they can just pay it on your behalf.
Okay, well, that's very good to know. And then for me on my side, something that I love to share is just the importance of, if you get life insurance, getting it at your youngest, healthiest age. The difference I would tell you is that, okay, for somebody 20 wanting to get 100,000, the company will give you 100,000 a lot easier, or say not give you, but approve you for 100,000 a lot easier than they will approve somebody that's 50 years plus. So for you, if you wanted 100,000 at the age between 25 to 30, you could look at paying about maybe $50 to $60 for 100,000 in death benefit. Where somebody who's 50, that's like, man, oh man, I forgot to get life insurance, but I got kids now and grandkids that I don't leave some money to. They call me up, hey Jahlinda, I'm 55, I want 100,000 to leave it up my children. Okay, that's going to cost you about $350 a month, because the company says your risk has increased. So it's more than likely they're going to be paying out sooner on someone who's 50 or 55 than they're going to pay out on somebody who's 20 getting life insurance. So a decision you make at your youngest, healthiest age is really a come up for your future self. And I don't think that we understand that as a millennial generation until it's like, oh, this is the simplest way I've heard it explained. You don't wait until your house is on fire to get fire insurance. You had to have it previously in order for it to help protect and pay for what happened when the fire did occur. So for me, I think our people, our age group needs to understand that you don't wait until you have the family, you have the lifestyle, or you're in retirement to need money for retirement. You need it at this youngest age. We need money for retirement. It's a given. So I think for me, I just like to stress that hey, it's a conversation that one conversation can lead to one decision that leads to one action that can change your life. I made that up myself.
I love it. Nice little. This is a. You should make it into a cute little quotable thing and put it on Instagram. Um,
Mm-hmm.
I don't know about you. Did you have any other questions? I know you had a question thing on your Instagram. Did you have any other questions that came through there that you wanted to share?
Yeah, we actually answered a lot of those throughout our conversation today, but I do see another question for you on here.
How can you estimate what your closing cost will be? Is it a percentage? So this is the part that I don't really like. While you know exactly, well, depending on which loan type you'll be using, you know that, okay, I'm either going to have to put 3.5% down if I'm using an FHA loan since I'm a first-time home buyer, or I can do a 3% conventional because I have super low debt and a really high credit score, or I'm putting 20% down. I have that saved. But when it comes to closing costs, there's no exact amount because closing costs are made up of a whole bunch of different little fees. So there's no way to have an exact amount. But typically, I say it's anywhere from 2 to like 5% of your purchase price. Typically, with a lower price home, you're looking closer to like 2 to 3%. So that's what typically you're looking at. And then it can vary. It can go all the way up to like 5%. Especially when working like with new construction, sometimes closing costs are a little higher because the builders are charging every fee possible. So that's why it's important to make sure that you're taking advantage and getting some incentives for your time.
Mm-hmm. I think we did a great job of covering a wide array of information, you all. If you have any questions, feel free to put them down there before we close for tonight. But I think we shared a wealth of information.
I did
Um,
I did have one question that came through from Instagram that I didn't get answer yet. And it says, how do you feel about the NACA program? So the NACA program is a neighborhood assistance program that's available in certain areas for people. And it's a nonprofit organization, and it's meant to help revitalize low to moderate income areas, or help out low to moderate families. And so the pros and cons. So the pros is no down payment and no closing costs. But although there's no down payment or no closing costs, there are still things that you would have to pay. For example, what I talked about, prepaids. The cons, it's a process. Nothing in life is free. So it's a process. So as you have to give something to get something. So like if you're gonna get no down payment and no closing costs, best believe you're gonna go through the ringer for it. So it's gonna be a process. It's gonna be a tedious process. It can take as long as 6 months to go through the process. There's a lot of in-person meetings. I'm not sure if they're doing in-person meetings now, just because of the current climate that we're in. But there's a lot of meetings that you have to do with a mortgage counselor. You pretty much you have to jump through hoops. They also make sure that you save the difference between what you're currently paying in rent and what you'd like to get pre-approved for. They're gonna make you pay yourself that difference to make sure that you can afford a home or that home. So and then what else are the cons? I think I wrote down. So some of the cons is the time that it requires. So like if you're a person that you're looking to buy a house in the next 3 months, the NACA program is not for you. Another con is it is because they're essentially kind of giving like free money when it comes to the closing costs. A lot of people there's a lot of people that want to use that program, so they're always backed up. So you can't go into it with a specific timeline saying that, oh, I want to go through the NACA program, I want to close on my home by December 6th. If you're a person with a strict timeline, NACA is not going to work for you because NACA takes as long as they want because they can. What else? What else? Another con, they place a soft lien on your house. So it's required where when you buy a home by like when you buy your home, like at whatever point, depending on the type of loan that you use, at whatever point you decide, oh, I want to move, I want to turn this into an investment property, you're free to go. However, when you own a home with a NACA home, it's required that you live in the home. So like you have
Mhm.
to you have to be a resident of that home. So as long as you live in that home, you can use the loan. The minute that they can sense that you're not living in that, that lien is staying on the home. And if you were to decide to sell it, like if you're not living, it just presents a lot of like issues when it comes to that. And then what else? Oh, for there are although there are no income limits, there's no income limit for NACA, meaning you could make $1 million and use the NACA program if you want. But what it does limit is if you make above the median income for that area, for the area that you're looking to buy in, then it restricts the area you can buy. So if you make more than the median income, then you're restricted to only buying in low to moderate income areas. You can't buy in a high income tract neighborhood if you are making $1 million wanting to use NACA. However, if you make less than the median income, you could use NACA to buy anywhere that NACA supports. So that's a pro. But overall, NACA, it can be a great program if you have the time, if you have the patience, the perseverance, then it could be a great program for you. Otherwise, if you're on a timeline, you're in a crunch, then it may not be the best for you. You may have to look at leveraging other tools such as seller closing cost assistance, or maybe a 0% down loan program to uh, help you out. But that's that question answered. If we don't have any more questions, I think tonight was fantastic. I really enjoyed it. I look, I made some notes for myself here. I'm definitely
Yeah.
gonna look reading that book, Becoming Your Own Bank, Money, Health, and Insurance. Is that the name of the second one?
Money, money, wealth, and life insurance. And so,
Oh,
Becoming Your Own Bank is by Nelson Nash. Becoming Your Own Banker. And then Money, Wealth, and Life Insurance is by Jake Thompson. If you need the PDFs, I have them. I'll just email them to you. All you got to do is ask me in my DM. But yes.
oh, Alberta, we're saving the live. So no worries. If you didn't get to watch the live, it was full of great information and saving it. And if you have any questions beyond what we talked about tonight, please feel free to message either of us and we'll be more than happy to help you.
Yes, ma'am. Thank you, you guys, for tuning in. You guys were very like interactive, asking questions. I loved it.
You know, I'm happy that we weren't talking to ourselves because I was nervous for a second. I was like, ooh, I hope we don't have to talk to ourselves for this live, but I'm
Mm-hmm.
everyone join, and we have 1 minute and 57 seconds remaining. But thank you guys so much. Maybe we'll do this again soon.
Yeah, we can.
Okay, sounds like a plan.
If anybody has any questions, let us know what topics or things that you want to know more about that we can go more into detail in. We would love to share that information.
All right, well, that's it for today. Thanks again for tuning in. Bye, guys.
Bye.